Hello everybody. Good afternoon to you all traders. Good afternoon, Mike check, and I'm looking at what is ongoing today. All right, now that we have everything running pretty good, pretty decent, I'd like to start. Whether you're in London, sipping tea in New York with your morning coffee, or anywhere around the world, welcome to today's live retail sales breakdown. You see, we've been trying to get these streams every Friday, and the goal here is just to have a chit chat and just teach and explore the markets together. Our main focus is breaking down at the moment fundamentals, and of course mixing that, integrating it with the micros. So this isn't just any economic release, all right? Put a thumbs up if you can hear me well. We are going to be breaking down economic releases today. You see the retail sales, the USD retail sales. This is one of the most important snapshots of the US economy. And we get this every other month. So if you've ever wondered why the market sometimes explode, if I just check one of my charts here, you can see everything looks pretty fair at the moment, but once the releases happen, you're going to see some very big spikes. If you've ever wondered why this happens, in seconds and many other times barely twitch, today you're going to learn exactly why and how to use these kinds of news releases to your advantage. Exactly. And yes, before we dive in, I want to give a shout out to my partners, Pocket Option. If you're trading alongside me today, remember to use the promo code. It will give you 100% bonus on your fast deposit. Of course, the link is in the description. Don't forget to subscribe, of course, and we need to take all the capital on the table. So try to use all these opportunities to leverage and, of course, enhance your trading. Okay, so with that being said, we are going to start right away. Let us see where we are going to start. So when I open my calendar right now, we have 6 minutes before core retail sales are released. Now, retail sales, what are they month to month? This is essentially measuring how much consumers spent at the retail level, the micro, compared to last month. Think of it as a thermometer. For economic activity. But instead, checking your body temperature, we're just checking the economy's spending temperature. I don't know if that makes sense. And we would like to check out these numbers and compare them historically. So you can access this information on any economic calendar. It's pretty much mainstream. Consumer spending makes up roughly 2/3, to 70% of the US GDP. That means if spending rises, it's usually a sign people are very confident, okay? People have jobs. All right, let's see. We have people from Poland. Oh, nice. We have some interesting faces today. Wonderful. Okay, so I'm just rushing around with time. We don't want to get stuck in all these explanations, but I just want to give you some background information, so you can have an idea where I'm coming from. So if spending rises, that means people are confident, they have jobs, income, they're willing to spend. And if it falls, it can be a red flag for the economic slowdown. Now, we also have core retail. Core retail sales, these are pretty much the same number, but it excludes autos. Why autos? Because you see, car dealers are notoriously volatile. This is one thing that you need to understand. One big discount from a Ford or say a Tesla can swing the number massively. So core is more cleaner, and I like to look at the core. We're not going to get into the details, the analysis, and how I do it, but probably over time you'll be able to understand. So it's very stable, and it measures the underlying consumer spending pattern. So in terms of strong retail sales, it means that the US economy is holding up, which can make the USD stronger. Now, looking at the numbers, we're having a forecast of 0.6, and we are having another forecast of 0.3. Now, we would like to monitor that as we get into the numbers. Now, that is pretty much straightforward. So here's where it gets very interesting. You see, because the USD isn't the only thing that reacts. This one number can send ripple effects across the entire market. So how do I go about my analysis? I like to check out the indices. We have the DAX, the dollar index. So the basket measuring USD strength against other major currencies. Think of it as a USD heartbeat. You can check that anywhere on mainstream as well. We have the US 100. The US 100, I've opened the chart here. You can see that. They have it on pocket options, and it's a very nice barometer. It has tech-heavy industries in there, very sensitive to interest rates. So a strong USD and a rising yields can pressure it. So a weaker USD, we have falling yields, can lift it. So this is a very nice one when we are jumping into the fundamentals. And of course, gold. Gold is the standard. Anything inverse to the USD strength most of the time. If the USD rises, then gold often drops as investors move to higher yielding USD assets. Now, another one is the US 10-year yield. You could get that on a bar chart or any other nice sites out there. Bond yields rise if data is strong. Markets expect higher interest rates, and they fall if the data is weak. Now, I want to open up your eyes to the volatility indices. How much time are we left with? Let's see. The volatility indices, we're having 2 minutes. Great. So quickly, the volatility index, you can get this on bar chart again. It measures the market's expected volatility over the next 30 days. So based on the S&P 500 option prices, it's often called the fear gauge. So before anything to do with core retail sales, I quickly come here, I look at the volatility index, and I measure it. So how do I measure it? These are my own personal parameters. A low VIX will be below 15. So currently the open is 14. The market expects calm, big surprises in news, right? Now, if you're looking from 15 to 25, that's a moderate VIX volatility index, and that is normal uncertainty, market priced, and the high one would be above 25. So I'll be keen to seeing how this reacts to the news release. Now, before any major news, a Fed rate decision, a CPI or whatever, if it's high, market is bracing for an impact. Now, at the moment, we see that the VIX is low. It's right below, dancing in between 15 and 14, the lower boundary. If it's low, the market is very relaxed. And I also quickly look at the heat map. Now, a heat map in any space, crypto or futures or stocks, is a quick visual tool that shows how coins or tokens are performing. Usually with green for gains and red for losses. So you could do your correlations as we enter. Now, I'd like to jump in. We are 5 seconds away from the release data, and I'm opening, say, gold. Let us see how gold reacts. Let us see how gold reacts. Okay, the data is in. We expect a quick, we draw our boundaries right there. we expect some kind of movement. Okay, it's pending, and there you have it. We have 0.5 for retail sales, which is very, well, it's lower than expected. And we have 0.3 with core sales. Now, don't forget, I told you about the autos. The autos cause the imbalance when you're reading this data. So I like to focus on just plain retail sales. Now, we're looking at gold. We're looking at USD CAD, Australian dollar CAD, Euro CAD, and the JPY. Okay, so far that is a good sign. We had no spikes, and as you will be able to understand, the trading psychology. When you're trading news, the number one reason why traders blow accounts on news is impatience. Okay, you have to get a feel of the market. How is the market? You know, is it breathing? Is it at a support? Is it at a resistance? You have to have some kind of background story going on. Now that we know that the data is out, and my take today for this particular session is bearish on the USD. So that's not enough. We need more confirmations to make decisions. So when traders typically see these numbers, what do? They just simply say, I'm going to buy or I'm going to sell. Now, why is that wrong? Because we need to factor in pricing in, we need to factor in what the institutions are doing, and a lot more. So when they see this number, see a huge candle, happily there's no big candle at the moment, they just jump in blindly, and that is gambling. So what we do instead is we understand there are three waves of price action. I don't know if you're getting me. Many of you like to use Elliott waves, you use all kinds of indicators, but they're just three waves. Make it simple. I have, besides an RSI, I don't have any other indicators here. I'm just trying to understand the fundamentals, because I always tell people fundamentals supersede. Okay, we're getting some questions here. What is expected buy or sell? Okay, great. I'm watching from New York. All right. We're starting to get people around, and that is amazing. Thank you for coming in. We'll get to chit chat at the end, but you can ask your questions. Asif Mughal, what is expected? Well, what is expected? We are having negative numbers. We're having 0.5, and the previous, imagine the previous was let's see, the previous was 0.9, so it fell by 0.4%, which is really bad. So we look for any initial spikes. I like to go down to the micros. So let's look at the 1 minute. We had no spikes on the gold. We had no significant spikes on the other instruments. Okay, we're getting some movement here, not so much of a movement. So the initial spike is kind of like a knee-jerk reaction. You know, these are pure algos and ultra-fast players. These are high-frequency traders, people with bots, and all kinds of, you know, Goldman and Morgan, JP Morgan, and all these other institutions, and also some commercials. We have some hedge funds in there. If you see a whipsaw fake out, you know, like we're having like out and back and up and back very quickly, the market reverses to grab liquidity, all right? If it spikes out of a support, comes back in and starts to linger in between a high and a low, that is just, you know, the market doing its thing. We have some market makers probably on the other side, and they're grabbing liquidity. So this is where the emotional traders are pretty much, you know, they are banged. Now the true move, that is the third wave that I always talk about, is once the dust has settled, pre-New York. After that, the news is out around 9:30 of New York time. the true move starts. Every instrument has its particular template. I always say that. So don't just jump on any instrument, study it, a back test, do a lot of history analysis.